Ladies and gentlemen, welcome to Wealth Dom. With me, your host, Noble BM, bringing you today a stock analysis for AbbVie, ticker symbol ABBV. AbbVie just had a major stock drop, over 12% in the market, and I thought this was a great time to do a stock analysis. Maybe it is a buy or a further sell opportunity or just hold. So let's jump into it. Take a look at economic events. We have nothing major happening today on Monday, November the 11th. Also tomorrow, Tuesday, we have only unemployment rate from the UK, and from Germany we have economic sentiment. Then on Wednesday we have core inflation and also inflation rate for year-to-year month-on-month. And on Thursday we have PPI and Fed Chair Powell speech. Then on Friday we have from the US the retail sales. Now, if we take all of this into consideration, I would say that this is a medium risk to the market, with pretty much all economic events expected to come within range of expectations. Now, if you go to a technical analysis for AbbVie, we can see that it is currently at an RSI of 29.60, which makes it a low risk for a further price decline, but it's not a very low risk. So the price could further decline, especially if we take a look at the MACD. The MACD is currently triggered a sell signal, but is not oversold, and it could also go further, with the red line being a positive 1.21 and the blue line being at 0.44. Now, today's candle, which triggered the sell, didn't fill. So let's take a look at how this is going to close up at the end of the bell. Now, AbbVie is a great company. It also returns a pretty significant dividend of 3.11% on a yearly basis, but the next dividend X date is somewhere in January with a payout in February. So buying it for the dividend wouldn't be that good of an idea. Now, with a price to earnings ratio of 69.93, actually, if you do a quick calculation, that is not correct, because if we take the last earnings per share, which is $2.97, and we bring up here a calculator, so let's do the current price, which is 176.40, let's say 50, divided by 2.97, is going to give us a 59 PE. Now, this is a growth company, remember, but their average PE is somewhere around 28. So this is roughly a 102%. So this would be a roughly 102% difference of the PEs from its medium range, which I would consider a high risk. Now, because the sell-off was triggered due to just the bad news, and this is due to the fact that they failed the latest trials in their drugs. So this is not the end of AbbVie, and this is a overall good stock. And don't forget that buybacks are still open, so stock price could definitely gain from its buybacks. Now, a average forecast for the stock for the entire year is 20%, which is above market average. So from this point, if we take 1 year and we would get 20%, that would be, I consider, a pretty good return. So I would consider this a low risk for further price decline. But these price averages need to be taken with a grain of salt, so please be careful. Also, this is only my opinion that for the moment, this would be a great trade, maybe even hold for the long-term trade. So short-term trade, okay. Long-term trade, maybe this position, but definitely not a further sell from this position. But these are only my thoughts, so please do your own research. I'm not a financial advisor. It's all up to you to handle your own finances. Remember, this is just an educational channel. So that's it for me. Thank you so much for watching. Please don't forget to share, like, and subscribe to the channel. Catch you next time. Bye-bye.